Welcome back. Egypt has sold $3.7 billion in Eurobonds this week to partially reduce the $8 billion deficit gap in the state budget. Authorities in the country say low global interest rates on long-term notes have prompted the country to tap the international debt market to extend the maturity of public debt. From Cairo, here's CGTN's Yasser Hakim with the details.
This is the first time in 2021 that Egypt has tapped the international market for financing. The issuance included the sale of $750 million in 5-year bonds at 3.875%, $1.5 billion in 10-year bonds at 5.875%, and $1.5 billion in 40-year notes at 7.5%. The $3.75 billion Eurobond was a surprise, since the government had earlier denied it was planning to raise funds from the international market.
The
Minister of Finance could have covered the budget gap from the foreign currency reserves of the central bank, but the government wants to diversify the sources of debt to have more hard currency. The aim is to finance part of the budget deficit as there still remains a gap. The finance minister said he would fund the rest of the deficit through different sources like the IMF or local commercial banks and other mechanisms.
The sale was oversubscribed 4 times, with $15 billion worth of orders received. Some experts believe the high demand reflects investor confidence in Egypt.
If we look at the latest bond sale, we managed to release the 40-year notes, which we couldn't do last year, and the return on investment is 7.5%. This shows how strong the economy has become and how lenders are confident about Egypt's ability to repay the debt. The very high demand, which was fourfold, is also a reflection of the trust in Egypt's economy that has seen growth rates at a time when most economies contracted during the pandemic.
In the meantime, Egypt's finance minister, Mohammed has said that the North African state will not re-enter the international bond market again during the first half of 2021. Yes, Hakim for CGT.